Hey, this is Justin with DayTradeTheMarkets.com on Friday, September 21st. First day of my favorite season of the year, certainly. And I thought what I would do today is do something a little bit different, a little unique, and just start with a naked chart and then build the chart with each component and then make sense of what each piece of evidence is telling us. And so to kind of start that idea, wanted to kind of talk about the way we look at things in terms of the building block approach, and that we have various pieces of evidence. We have some bigger picture, what we call intraday evidence, some bigger picture evidence pieces or components, and then some real-time intraday pieces of evidence. And basically the way this works is that you want to look at each of these components as basically clues or pieces of evidence, and the more clues that come together or are in confluence that support a decision, the better your edge. And so, I guess a question would be, are any of these pieces of evidence more valuable than the other? Not necessarily. I tend to focus mainly on relative aggression bars. I think those are extremely powerful. And then I think you also have to ask yourself, do you want to focus more on intraday or bigger picture levels, or kind of the structure within the day? I tend to have a slight lean toward the structure within the day in real time as opposed to the bigger picture, but that certainly is very important. So I say that with a slight lean in that sense. But in other words, you want to look at each of these components in isolation, and then the more of them that come together, the bigger that your edge can be. So to kind of make sense of that, let's just start with a naked chart and then build it out one piece at a time. So here's a chart obviously with no indicators on it at all, and the first one I'm going to add is what we call our relative aggression bars. And to give you a little bit of background, these relative aggression bars are telling you which side at any given moment on any given time frame within the bar are more aggressive or are in control of that bar, so to speak. So the majority of the bars are going to be black, or whatever you set them to be. Then we have three levels of both positive aggression bars and negative aggression bars. And these are called level 1, level 2, and level 3. And we really, the level 1s give us good information. They're telling us there's moderate selling aggression or moderate buying aggression. But really we want to focus on these level 2s and level 3s. Those give us what we call a bit of a roadmap. So when we look at today's chart, you can see I've just put on the relative aggression bars. And the chart's a little tight because I'm trying to show the whole day. But what I want to show I'm just going to focus in on the level 2 and level 3. So what I'll do with that is just remove the level 1s. One sec. Okay, so here I've just got the level 2 and the level 3 aggression bars. And I kind of want to look at these kind of piece by piece, because what we like to look at, kind of what we call our roadmap concept, is when we get a level 2 or a level 3, do we get follow through or do we get rejection? And so you can see we had a level 2 selling bar here, and immediately the low was taken out. So our expectation short term is that the market's going to continue a little bit lower. Then we have another level 2 bar. We have continuation. But then we have a level 2 buying bar that steps in. We have immediate follow through. We continue higher. Here's our first level 3 buying aggression bar on the day, and you can see that we did not even take out the high of that at all. Pretty soon thereafter we took out the low, and we got some full bars below that at that point. So that's telling us, at least short term, there's been some capitulation in the market. We would expect a move lower. And that's confirmed with this next major structure, which is a selling level 2 that has follow through, another selling level 2 with follow through. Here's a buying level 2 that gets rejected. So again, to this point, every single level 2 or level 3 bar, except for this one right here, has been controlled by the sellers. So again, it's kind of that roadmap. It's the path of least resistance these aggression bars are telling us. Okay, here's a level 2 with follow through, level 2 with rejection, level 2 buying with rejection, level 3 buying with rejection, level 3 selling with follow through. And again, it's the close of trading on a options expiration day. So the last, toward the cash close is a little bit wild, but you get the idea, I'm hoping. So that's our first building block, and we have a few people that just trade with these relative aggression bars and nothing else, and it's actually not a bad way to go. It's a very, very powerful tool. I love this tool, just this component alone. So that's kind of the first building block, if you will. Now next I want to look at the intraday support resistance zones. I'll throw those on the chart now. And before I do, just to give a little bit of a background, basically we have these real-time zones that form that are red on the high and green on the low, and they're telling us essentially that the green is a support zone, the red is a resistance zone, and it's telling us that the red, if you have other evidence, you don't want to just take these blindly, but if you have other evidence, like as I said, when some of those pieces of evidence come together and form confluence, the red zone is, all things equal, a good location for selling, and it's an area you'd want to be careful if you're considering a buy. The green zone is a good location for buying, and you'd want to be careful if you're considering a sell. Okay, so just a little bit of background on that. And now let me throw up the chart with the aggression bars, and the next block being the support resistance zones, the real-time support resistance zone. Okay, so here we go. And again, I've got the level ones here as well. But again, remember the context from earlier where we had the follow-through on all the aggression bars, the major aggression bars. So it was showing us, all things equal, that sellers were pretty well in control. Now with that said, early on, we tested a support zone. We did have a bit of a bounce. Then we pierced through, tested the resistance zone here. It then shifted up here. We had that capitulation off of that resistance zone, which is interesting information. We did bounce a bit and have some consolidation off of the green. Then we pierced through it and then retested in this red zone. So again, the idea being these red zones are areas that, all things equal, you'd like to be looking for selling opportunities, and you'd want to be thinking twice about buying. These green zones, all things equal, you'd like to be looking for buying opportunities, and you'd like to think twice before selling. Okay, so again, when you're looking at that in isolation, that's how you're thinking about it. The key and kind of the beauty of this is that confluence idea where you're waiting for a lot of pieces to come together. Okay. So the next piece of evidence that I want to throw on there is what we call our intraday directional filter. And again, to give a little bit of context, the filter is trying to determine the relative strength or weakness of the market at that time. Path of least resistance, if you will. And again, this is just taking into account what's going on during the session today. It's not looking at what's happened yesterday or the week before. We're just looking at, in isolation, at what's going on in the market today. And we have 5 possible readings within the filter, and you can see them right here. We've got the very bullish, bullish, neutral, very bearish, and bearish, and you can see how that would show across the bottom of the screen. So again, it's just one component, and in isolation, it's giving you a piece of evidence. The key is waiting for various pieces of evidence to come together. Okay, so here's the filter. We start every day neutral. Order flow is telling us that the market's a little bit more bearish than bullish at this point. Again, just looking at this session in isolation, not taking into account anything that's happened prior to today. Go back to a bit of a neutral, and then we get to strongly bearish toward the end of the day, right around 12:30 Eastern. We went strongly bearish, and you can see we closed on lows basically. So again, it's another piece of evidence that's helping you make decisions. Okay, so again, you can see in this case we have a resistance zone, rejection of a level 2, filters dark red. You can see several pieces of evidence come together. Hopefully that concept makes a little bit of sense. Next, let's put on the deceleration bars. And again, for some context, basically the deceleration is the opposite of aggression, where in this case, let's say we have a bar and then we have another bar that makes a higher high relative to this bar. But within this bar, there's actually less buying aggression by a certain ratio that we have calculated compared to this bar. So in other words, we have a higher high, but the level of buying aggression is decreasing, which would indicate, all things equal, the market's likely to turn around. Because again, if this second bar that has the higher high had an increasing level of aggression within that bar, the expectation would be for the market to move higher. Same thing on this. We have a lower low than the prior bar, but the level of selling aggression is decelerating, which tells us that most likely the market's going to turn around. And again, with everything, you want to look at these in context. So in isolation, you wouldn't just want to buy and sell every single deceleration that comes on the chart. There's not enough edge with that. But when you can combine deceleration bars with other pieces of evidence, whether it's structure, the filter, support resistance zones, whatever the case may be, that's when they come in very handy. Okay, so I've added the decelerations, and you can see they're the diamonds and the triangles, I should say, and the circles. They're just various calculations of different types of deceleration. We don't need to get into that now. But again, you don't want to just blindly take these, but when you have other pieces of evidence, like against this red resistance zone with a red filter, or against this green zone with a bigger picture bias, green zone, bigger picture bias, you can see that they just add to your decision-making possibilities. So I haven't even gotten into the bigger picture bias information. So each day we do a report where we have our bigger picture bias being up in this case, and the scenario in which that would change, and then some key information today. Basically, we were saying if the rally can hold above the 58 level, we would expect another leg higher, and then possible support in the 48 to 47 area. So again, if you go back to the chart, here's that 58, 59 area. And again, you can see that the market was not able to hold above that level. And every time we had a structure, like I mentioned earlier when I talked about the acceleration, the bears were pretty much in control. So you can see how things lined up right in here, where we had this bigger picture level, the shorter term resistance area, capitulation off of this level 2. Later on, we had the red filter. All of the structure was telling us that the bears were basically in control. So you can just see how the various pieces of evidence all come together and play off of each other, and there are building blocks that, if you kind of understand them one by one, can help you make better decisions. Does that mean that obviously that you're going to win on every trade? Of course not. I mean, that's unrealistic. But the idea of successful trading is to try to put the odds or the edge as much in your favor, and then try to make as good a decision as you can with the evidence that you have. And that's essentially the idea with this. So hopefully you got something out of that video. I just wanted to kind of break it down step by step, and hopefully that makes a bit more sense. If you have any questions about that, let us know. We'll be happy to discuss it further, show you any other charts, whatever the case may be. And other than that, have a wonderful weekend. We'll talk to you soon.